Friends, what is happening in the economic scenario in India? The world's attention is definitely in our Indian region for the past few years, especially after Prime Minister Modi taking charge as the Prime Minister. What is happening is, worldwide there are a lot of turbulent activities affecting market sentiments. But here in India, peace prevails, except few sporadic violence. There is nothing much to change the calm atmosphere ideal for business to flourish. That we saw in the first monetary policy of this fiscal year, which was in tandem with the market expectations, which was of course keeping the rates, the repo rates, the interest rates, bank interest rates unchanged. Finally, it was decided the repo rate to be at 6.25% only. This is a very pragmatic stance from RBI, as it actually based on the wider market conditions. Well, why this monetary policy did not bring any major change under the justifiable domestic and international conditions, which are very conducive for the markets to flourish? Well, the government and RBI should is working hand in hand, addressing various aspects. They are giving a push to reforms so that issues can be addressed in all activities like import and exports. The dollar rate is below 65 rupees and the crude prices hovering around $50 to $55. The global environment is improving with global output and trade projected by multilateral agencies gathering momentum in the current 2017. Accordingly, external demand is supporting the domestic growth. On the whole, it is a very favorable domestic factors prevailing here. It is expected to drive the acceleration in gross value added growth, GVA growth. The pace of the remonetization is continuing to trigger a rebound, and it is expected so. Activity in cash intensive retail trade like hotels, restaurants, transportations and many other unorganized sectors are being restored, and there is activity which is bubbling. The pressure now will be on the banks to pass on the benefits of demonetization to the customers, indirectly seeking interest benefits to home loan, automobile loan, education loans, etc. The union budget too had proposed large government investments that should really stimulate capital expenditure, rural growth, social and physical infrastructure. Well, the imminent rollout of GST as expected in July this year, the institution of the insolvency and bankruptcy codes and the abolition of Foreign Investment Promotion Board, these measures are expected to boost investor confidence and bring in efficiency gains. Well, in the risks front, what is in store? These key factors are worth keeping in mind if you are going to take investment chances. The downside risk to the projected growth path may come from the outturn of the much awaited southwest monsoon. It is expected to be a normal monsoon as of now, but anything can happen. Well, the oil price volatility, the oil price fluctuation. Yes, the oil price fluctuation in the international market, given the situation in Syria and other areas, and the emerging situation in the Asia region, especially, particularly the North Korean region, are all going to affect movement of crude. Broadly speaking, the lending rate might be continue to be very low, which might affect the profitability of banks. Crude price might spiral, fuel costs. All these factors are being taken into account by RBI. That is why they have a very pragmatic decision of keeping the rates unchanged for the last few occasions. The last two occasions, the expectation was a reduction maybe in the rates, but they were very pragmatic. Now you know why. The same thing has happened this April, in the start of this new academic year, the start of the new accounting year. Well, on the whole, RBI has taken a wait and watch policy. In due course of time, the RBI will have much more clarity on global factors like global growth outlook, US market movements, oil price volatility, monsoon behavior, and domestic demands. So, what else can we do? Please watch out for good opportunities in the investment market. Thank you.